Welcome to GMEDD's interview with the one, the only Ryan Cohen. I'm Joe Fonicello, your host for the next hour. Ryan serves as the chairman of GameStop and the manager of RC Ventures. Ryan, this is your first public appearance in over 2 years and the only time you've sat down with anyone for an extended interview like this. Why have you remained so quiet despite the attention?
Well, first of all, thank you for hosting me. I've been incredibly impressed with the level of diligence that GMEDD has done for GameStop and for the community. And I couldn't think of a more appropriate channel to have this conversation with. Secondly, in terms of why haven't I done anything up until now, I haven't had time. I've been focused on work. So sorry for my dog in the background. But I haven't had time. I haven't had time to play. I've been focused on work, so it's taken up all of my time.
Before everything with GameStop, you are the founder and CEO of Chewy at the age of 25. Can you talk about what building Chewy meant to you and what you learned from that
Can
experience?
you hear the dog in the background?
Yeah, it's perfect.
It's a real dog, by the way. It's not just sound effects.
Yeah.
What did I learn from Chewy? Chewy was hard. We built Chewy in Florida. It was very hard to raise capital. We were a bunch of nobodies. It's like 3 states basically account for like 75% of venture capital: New York, California, and Massachusetts. So raising capital was really difficult at Chewy. Attracting talent was very difficult at Chewy. Especially being in Florida, the talent pool was pretty limited. And we were selling 30-pound bags of pet food online. And so that wasn't very popular either against the backdrop of pets.com. So first, everyone said pets, you can't make the unit economics work selling 30-pound bags of pet food. And then once we had positive unit economics, everyone said that Amazon was going to crush us. And neither of those things were true. But it was very, very tough. It's a low margin business. Part of the secret sauce was just how we structured it. We had negative working capital. We took the business from like 200 million to 3.5 billion. We burned through less than 150 million of cash, even though we accumulated significant losses. We turned our inventory over faster than our payment terms. But granted, going head to head against Amazon, selling 30-pound bags of pet food in the mail, tough business.
Yeah.
GameStop, on the other hand, in many ways, Chewy was like a new construction. We built the business from the ground up, knew the business inside and out. GameStop is different. We inherited a bunch of legacy everything and underinvestment across the entire business, people, the entire technology stack, just decades of neglect. And so it's hard to turn around a brick and mortar retailer that's under the kind of pressure that GameStop was and continues to be under. But that was also part of the attraction going into GameStop, was that a transformation the likes of GameStop was really unprecedented. And I was motivated by that. And, similarly, selling 30-pound bags of pet food in the mail was also very unpopular, and we figured it out. So, yeah, I like tough things. I don't like to make my life easy for whatever reason.
You've made yourself into a pretty prolific activist investor. Is RC Ventures evaluating other opportunities in this market, and what do you look for?
I'm always looking for opportunities. What do I look for? Yeah, and of course, I mean it's definitely a better environment and market to allocate capital today than it's been, in a very, very long time, at least in the past decade. So I like consumer businesses. That's my core competency, and I like simple businesses.
How big is RC Ventures?
You're looking at RC Ventures team.
So why did you invest in GameStop?
I invested in GameStop because I thought it was cheap. I thought the intrinsic value of the business was worth more than the price that I paid. There was a tremendous amount of skepticism around GameStop. And those are the things that I like. I like looking at things where no one is looking at them. Those are usually some of the best opportunities. And I'd say the opposite of that is IPOs, where, the animal spirits are out and everyone's kind of
Mm-hmm.
standing in line trying to give them money. GameStop was on the opposite end of that. No one was interested in investing in GameStop at the time that I made the investment. It was hugely unpopular, and those are the things that attract my attention. I'm contrarian by nature, and so it was a pretty contrarian investment at the time.
Yeah, there are some contrarians online. What did you know about the enthusiasm from some retail investors over GameStop on digital communities like Wall Street Bets?
I learned about. I mean, I'd say I only really noticed it when I filed my 13D. I lost my 13D virginity in August of 2020, so I was a late bloomer, and that's when I noticed retail activity. And then when I filed subsequent amendments, I noticed it, but it was something that snowballed over time, and it was impossible to predict, frankly. So obviously, we know what happened. Uh, we know what happened afterwards in January, but I learned about it really when everyone else learned about it.
Yeah, last we spoke, you referred to the events of January 2021 as one of the most fascinating things that has happened in the history of financial markets. And it was life-changing for us retail investors. What was it like for you?
I was when I decided to join the board personally. I made a long-term commitment to be at the company for an extended period of time, and so there was a lot of deliberations, or I'd say board drama, going on after I joined the board. That really had nothing to do with the volatility in the markets, and had everything to do just with the transformation and everything going on at the company. And so we changed the composition of the board. We got rid of the entire board. We got rid of all the professional directors. We changed up the entire management team. And so I was focused on making all of the changes at the company. And that consumed all of my time.
Do you think what happened then could ever happen again?
I don't know. I mean, that's hard to predict what's going to happen in financial markets. Anything can happen. Anything can happen.
When you think about the attention GameStop's received since then, how has that impacted the company's transformation?
It's great branding. I mean, there's no amount of money that can get the kind of branding that we got from GameStop. So, uh, it made the company world renowned. It brought a lot of attention to the company, and I mean, I think it was hugely beneficial for the brand.
Yeah, I remember when that happened, we made a post on GMEDD saying this is the great opportunity to rebrand all the stores across the globe to GameStop because that was just free marketing, for everyone to know the GameStop
Yeah.
name. And you did end up changing Canada over to GameStop. So founding a company poses a different set of challenges than transforming a legacy business. How are Chewy and GameStop different or alike?
They're both contrarian, selling, there was all the comparisons with Chewy to Pets.com and then GameStop to Blockbuster. Um, it was harder to raise capital at Chewy. It was, every time we raised capital, we basically had one option. When we were hiring was very difficult. We were unknown quantity in Florida. Um, I'd say at GameStop, we've been able to raise capital. We're fortunate that we were able to do 2 ATMs. It's been easier to hire, being in the public markets and having that level of visibility. But in terms of the actual business, the business is more challenged at GameStop. Even if you look at the cohorts and the customer retention at Chewy, selling consumables online, we had really sticky customers, and at GameStop, it's completely different. You don't have sticky customers. So, we had a payback period and a certain lifetime value, whereas at GameStop, you got to make back your money right away when you spend money on customer acquisition. So it's definitely a different dynamic. Having said that, though, if you look at GameStop and the brand, and the store base and the strategic assets of the company, the size of the customer database, there's a lot of strategic, and just the revenue base, frankly. I mean, we needed to build that revenue base at Chewy. No one had ever heard of it. It was literally customer by customer. Whereas with GameStop, it's a known quantity already, and we've got a business and a foundation to build off of. But having said that, it's a foundation that was underinvested in for a very, very long time, and we've been working really hard to restore and rebuild that foundation.
So when George Shorman stepped down, there were a lot of speculation whether or not you would become CEO. You were CEO at Chewy. Why not at GameStop? Jim and Alan served as your CFO and COO, so we thought you were putting the Chewy team back together since they were placed on the GameStop board.
After Chewy almost killed me, so I didn't want to put myself in the same position in terms of just the level of sacrifice that's required to be the CEO. Having already done that is something that I didn't want to put myself in the same position. So I put myself in a position where I can be involved strategically, but not putting myself in a position where, once I'm CEO, with Chewy, and I guess this is just my work ethic and the way that I am. If I'm the CEO, I'll basically work myself to death, and I can't control myself. I'm an extremist, so I didn't want to put myself in the same position. I learned my lesson after Chewy, and then I have to control myself. I'm my own worst enemy.
You've hired and fired a lot of people. GMEDD tracks these hires, and on Yahoo Finance, I held up a stack of over 400 resumes to show it. What do you look for in talent?
Will, a really, really strong work ethic. Someone who is very, very, very hungry, and so will is embedded into you at a very, very young age. Skills you can acquire and you can learn. So I look for someone who's got a chip on their shoulder, someone who comes from a broken family, someone who was bullied as a kid, someone who's an immigrant and really has had to fight and is just incredibly hungry. Those are the kind of people that I like, and it's hard to find, and it's getting much harder to find. But those are the kind of people that I'm attracted to.
Today, you've become a hero to retail investors, and the pundits like Jim Cramer can't get your name out of their mouths. What has it been like becoming such a public figure?
I think I'm the same when I was 7, 17, 27, 37 today. I haven't really changed. I'm still a kid, still pretty immature. I have a pretty strange, dark sense of humor, and I don't plan on changing. So, yeah.
What do you think of the mainstream media and the talking heads in the finance world?
I'd say there's some publications and there's some pieces that are great and accurate, and there's some that are whiffed together in a few hours and aren't diligenced very thoroughly. So at least now with the internet, there's a lot more competition for the mainstream media, and there's a lot more avenues to get your story out. GMEDD is a really good example of that, and so yeah, it's hard to speak in generalities.
So, yeah, instead of going on CNBC and Bloomberg, you have a lot of fun on Twitter, and your tweets are often analyzed for a deeper meaning. I'm going to show you a few of your tweets, and I'd like you to explain what was going through your head when you tweeted it. So, we're going to start with your ice cream cone tweet. On February 24th, 2021, you tweeted a McDonald's soft serve cone. This was your first tweet on the board of GameStop. Can I take a stab actually at the meaning of this? I just want to see if I got it right.
Go for it.
Volition Capital's website says Chewy's first board meeting included a trip to McDonald's for soft serve. Is that
True.
right? True. So then what's the meaning of the frog?
It's $1.42. Well, this was before all the crazy inflation, but $1.42 for like 150 or 200 calorie ice cream, which is like the best ice cream in town as far as I'm concerned. And I had McDonald's ice cream, so my my tweets are just me being me, and it's a good deal. A good deal for a great treat. So that's the meaning.
So here on April 20th,
We could have picked
2021.
something else. Just preparing a drink.
For our audio only viewers, it's a bear shaking a mixed drink. And nothing, you have nothing to say besides that's just a fun tweet.
No comment. No comment.
Okay. May 28th, 2021.
Oh,
Ryan Cohen, RIP dumbass.
I mean, I told you I have a really dark sense of humor, and I can be very self-deprecating at times. So I figured that might end up being ultimately my tombstone. So I wanted to see what it would look like.
All right, what's next? Let's see. So June 3rd, 2021, Sears being torn down. What's up with that?
That could be GameStop. That could be GameStop.
That's why you shared it with the skull emoji.
I think there's a lot of similarity. There's a lot of potential similarities.
Can't stop, won't stop. And you're sitting on the toilet with a fax machine, or is that a phone, and a computer?
That's a very efficient setup, by the way. And I do my best work on the toilet. So that's not my actual toilet, but I thought it was a great idea.
Okay.
Got the full setup there. Fax machine, computer.
October 26th, we have a sumo wrestler being pushed by a much smaller man. What's up with this one?
I mean, that kind of feels what it is to that's kind of what the sentiment sometimes feels like at GameStop.
Yeah, that was my interpretation as well. Thought you're like taking on the big man.
Yeah. David versus Goliath.
Exactly. All right, what's next? MGGA, October 31st, 2021.
Well, you tell me.
I responded to this on the GMEDD account. Make GameStop great again. That was my prediction.
Sounds about right.
All right, I love it. What's next? Why waste money on college when Wikipedia is free? January 27th, 2022, with a link to a certain sex position on Wikipedia.
Well, I can't believe that image was on Wikipedia to begin with. And secondly, I can't believe the amount of money that people spend on college tuition when you can basically find everything. You can learn everything you need to learn online. So I believe that. I don't know why you'd end up racking all kinds of being in debt for the rest of your life when you can learn everything online yourself.
Fair enough.
And I thought the image on Wikipedia was slightly entertaining.
Yeah, I think you got in trouble with this one on Twitter. I think this was censored a lot of the time. When I tried to view the tweet, it'd be like,
"Yeah, you censor. Yeah, you censor." I don't. Think
I censored it on the preview here.
If it's on Wiki, yeah, but it's on Wikipedia.
February 22nd, 2022. A pair of shorts.
What do you think?
It has to be about short selling.
I mean, I'm not a fan of short sellers. And
why didn't you put an X?
I've shared that sentiment before. I don't know. I'll give you my Twitter account, and then you can make the posts.
You don't spend hours thinking about these, making sure it's at this exact certain time or anything like that.
No.
All right.
No.
You know what happens when I eat too much fruit? April 4th, 2022.
What happens when you eat? First of all, I love fruit. But when you have too much fruit, you got to be careful. You have to control yourself. So I ate too much fruit that night.
Is it not so bad though? Because that's where you get your best work done, sitting on the toilet.
And it's healthy. It's healthy.
That's fair. Arlington, Virginia. It's a photo of you in a GameStop store. May 12th, 2021.
I think that's pretty self-explanatory.
I think there was an article that came out that claimed you were ghost shopping. Is that what you do?
I mean, I'm always kind of, when I go into the stores, ghost shopping, checking out the place, seeing what the inventory.
And you don't get recognized?
Yeah. More recently, it's harder to do.
Okay. Now, when I wrote about this on our website, I noted what was in your hand, and we spent a lot of time trying to figure out. We thought it was a scooter, an electric scooter.
Yes, it was not an electric scooter though, but it was a scooter,
Ah,
just a non-electric scooter.
do you do that a lot? Do you ride a normal scooter around?
No, it wasn't mine actually. It was my
Okay,
son's.
all right, that's fair. So we got that one right. These are the kind of things we look at.
Every detail matters.
Yeah, of course. People were looking at the way the games were set up on the rack. People thought maybe there was a message there.
Yeah,
There wasn't one, right? No message in the games.
I didn't. I mean, no, there wasn't. No.
Wall Street charges lofty fees, doesn't risk its own money, consistently underperforms, and wins regardless of how the economy does. Meanwhile, Main Street faces inflation and a growing wealth gap. What's the solution? This is a tweet of yours, June 27th, 2022.
Yeah, I think that that's true, and I don't know what the solution is. I'm not a I don't understand all these management fees and why people give their money to they've got the cocktail parties and stuff like that, and I understand there's a certain allure by going and investing in a certain fund, but whether it's mutual funds or private equity or venture capital, I mean a lot of these structures are set up where it's heads I win, tails you lose. Like they make money regardless of whether they outperform the S&P 500. And so I don't really understand that concept. And I think that anyone that's managing money, there shouldn't be ulterior motives. And so I'm not really a fan of management fees. I think it's misaligned with investors and um, there's clearly also unprecedented inflation and a growing wealth gap, and it's complicated in terms of what the solution is because this has been going on for a long time.
I'm sick of seeing failed executives make millions in risk-free compensation while shareholders are left holding the bag. And then you're asked, so how do you change it? And you say directors should comprise of owners who bought shares with their own money.
Yeah, I think that's the simple and most effective solution. You've got a boardroom full of owners that are risking their own capital. You tend to think differently when it's very, very different when something is given to you and it's risk free compensation. And regardless of how the business does, you end up making money versus you actually bought shares with your own money and you serve on a board. And so you spend a lot more time on the actual business and business risks and how the business is going to allocate capital as opposed to everything in the name of corporate governance and hiring compensation consultants and overpaying executives. So people behave differently when they're risking their own capital. So that's what I think the solution is.
In April, you welcomed Elon Musk to the world of activism when he took note of the Twitter board owning almost no shares of the company. How do you feel about that?
I think that's par for the course. I mean, that's most public companies. It's like I think like it's like less than 10% of CEOs ever even buy shares in the open market. So I mean, there's very few insider transactions. You've got directors and executives that are serving on boards and they're very well to do. And I always wonder, what are they doing with their money? Like they're working at the company, they're serving on the board of the company, but then they put their money into something else, and that doesn't make very much sense to me. But again, that's the way things are right now. That's the way things have always been. That's corporate America, and it's frustrating.
You've stated that you think your Twitter is being suppressed. Do you think that changes under Musk's leadership?
I hope so. I think he's aware of the issues, and um, again, I mean that's just my theory, and I don't know why, and I don't know for sure whether it actually is or not. But I'm sure there's going to be a lot of changes now at Twitter. When you go from having a bunch of professional directors and just all the bureaucracy that comes with being a public, and most public companies have a tremendous amount of bureaucracy versus being a private company. I mean, you can be much more nimble and make changes a lot more efficiently.
I don't know if I should try and say this one in reverse, but it's November 14th, 2021. Our decoding was that it was, I have a small wee wee written backwards.
I think that's pretty funny.
Is it true?
I don't know. It depends who you ask.
It's subjective. Okay.
Beauty is in the eye of the beholder.
General Zhao's chicken is the official spelling, May 3rd, 2022.
I didn't think it was actually spelled like that. I was actually very surprised when I discovered that that's how General Tao is actually spelled.
And so you tweeted it?
My Twitter is full of all kinds of words of wisdom, as you can tell.
Mm-hmm.
I actually went from having a bunch
thought...
of high-priced consultants managing my Twitter to managing it myself. All the other tweets up until now were high-priced consultants. And I thought some of their content was incredibly inappropriate, so I let them go. I'm like, where are they coming up with this stuff? I have a small wee backwards. Like, come on.
So
do better
with this, I thought maybe you won an argument with somebody and you were like boasting about it. Like you argue with someone how to spell it, and then like you were right, so you wanted to tweet about it and show it to him. That wasn't it. You just found out how to spell it.
No, it was just one of those things where it was just this epiphany, and I was just like, wow, I can't believe it's spelled like that.
Fair markets are free markets, May 12th, 2022.
I think that's pretty self-explanatory.
Good use of taxpayer money is the government cracking down on hedge fund short sellers, May 15th, 2022.
Well, I think it's interesting that if you're long, you have to disclose those positions. But if you're short, you don't have to. And so, I think that it should be the same rules that applies to short sellers as people that have, that are long certain positions. I think that makes a lot of sense. I think ultimately that's probably what's going to happen. But there's not really much of a difference between being long or short a position, but the disclosure requirements are completely different.
Nobody sane can defend today's compensation for the corporate power brokers, most of which is risk-free. How did we get here? June 21st, 2022.
I think we got here when we started loading up professional directors in corporate America, and they started being responsible for shareholder money without risking their own. And, going and hiring compensation consultants and surrounding themselves with expensive lawyers and other consultants, and they don't care about the money. So they're going and they're overpaying for talent. They're overpaying ultimately for everything because it's not their money. What do they give a crap? So that's how we got here. Is you've got a bunch of professional directors serving on boards of most of these public companies, and ultimately I think the solution is you got to have people in the boardroom that are risking their own capital, and then they're going to act a lot more sensibly. But that's not the direction that we seem to be heading in. We seem to be heading in the opposite direction, and I think that I think that directors and officers should, if they're responsible for shareholder money, they should be risking their own money, and they should be buying shares with their own money. And you don't see enough of that. You see very little of that. So I don't like it. I don't like it one bit.
In general, when an executive gets paid millions of dollars and leaves a company in shambles, they should be forced to return the money. July 5th, 2022.
Yeah, I grew up, I saw my father wake up at 4:30 in the morning, go jogging. He was at the office by 6. He opened the door for his employees. He left at 6. He never took a sick day, go to work even when he had a 102 fever or food poisoning. And so he worked his butt off, and there was no free lunch in life. If the business did well, he made money. If it didn't, then he had some years where he lost money. In corporate America, somehow, you've got these executives that are making millions of dollars or tens of millions of dollars. They can drive the business to the ground, and most of their compensation is risk-free. And they don't work very hard, frankly, either. I mean, they're going and they're basically preparing PowerPoint presentations and doing conference calls. And so, corporate America is littered with risk-free compensation and overpaid executives. And it's deeply, deeply disturbing to to see what's going on and the level of wealth inequality in this country.
Mhm.
So, building Chewy, I was risking my own capital. I didn't take a salary for a very long time, and the salary that I took was really, really, really small. It wasn't millions or tens of millions of dollars. So, as an entrepreneur, as someone who grew up seeing a level of work ethic that's that's really unmatched, I don't understand what's going on in corporate America. It's a whole other world. It's like Looney Tunes, some kind of fantasy land or sick dream or whatever. But it doesn't make any sense to me. You can lose a lot of money and still make a lot of money. You can lose shareholder money and still make a lot of money, and it happens all the time.
April 13th, 2022, Ryan Cohen by day, Warren Icahn by night. And then also recently you shared a photo with Carl Icahn.
I think there's a lot to learn from Carl. I mean, he is the OG activist, and he's been doing it for a heck of a long time. And so, when it comes to investing, I learned a lot from my father. I pretty much learned everything from my father. He was the one who introduced me to investing. And then I kind of have a hybrid approach. I'm, willing to go activist and I'm ready to go activist if the opportunity is right. But if I could sit on my hands and invest in a great business with a competent management team, the way that Warren Buffett does it, and let your capital compound for you, then
Yeah.
I'm pretty agnostic in terms of what the approach is, whether it's activism or passive investing. And so, anyway, that was just me, being me.
Can you share why you met with Carl?
I don't want to get into the details of the conversation.
Politics is the gentle art of getting votes from the poor and campaign funds from the rich by promising to protect each from the other. The hell with the left and the right. Stop dividing the people.
You want to know my comments to this? I mean, I think that's what's happening. It's become very popular in politics on both sides of the aisle to divide the people. And, I think that the job of a politician, a good politician, and I'm not a fan of politicians, all politicians. But I think the job of an elected official is to bring the country together, and that doesn't seem to be happening. It's become very popular to divide everyone. So, I'm not a fan of the left, and I'm not a fan of the right. I don't like it.
Do you consider yourself a libertarian?
Yeah, generally speaking, the larger and more powerful the government is, the less freedom people have. And so, yeah, I'm in favor of the people having more freedom. I think that the greatest advances in society come from the private markets, and I think that ultimately is capitalism. And if you look at the level of innovation in this country, from the likes of the technology companies, as an example, I mean, that's an American phenomenon. And so, I think in general, I'm in favor of more freedom for people.
This is actually the last tweet we'll be talking about. So thanks for being such a good sport. Moving on. For a long time, e-commerce was said to kill off retail stores. Now e-commerce giants like Amazon are getting into brick and mortar stores. What are your thoughts on the future of brick and mortar?
I think if you look at e-commerce penetration as a percent of retail, it's still underpenetrated, and I think that just generally, I'd rather be an e-commerce company than a brick and mortar retailer. So,
Are you a gamer or did you game as a kid?
I gamed as a kid, lots of Call of Duty, all the EA Sports game, well, hockey and baseball.
I was just going to ask you what you played, so it's good to know. I was a Call of Duty kid myself. I'd like to talk some more about investing in the current economy, which is much different than the start of the year. How has your investment outlook and management philosophy changed as the world exits the zero interest rate policy regime?
Interest rates, higher interest rates are a game changer. And so it changes everything. It's changed how we allocate capital at GameStop. And that's not just GameStop specific. It's every single business. I mean, it's as simple as before you had 0% interest rates. And so there really was no discount rate. And the difference between long-term cash flows and short-term cash flows, really there wasn't much of a difference. Now you have a real discount rate. You've got the 10-year treasury north of 4%. And so the value of short-term cash flows is much greater than long-term cash flows. And as a result, there's, at GameStop, we're targeting higher returns, and we're focused much more on short-term profitability as a result. And so, we're cutting expenses aggressively, and we're going to continue to cut expenses aggressively and have much more of an emphasis on short-term profitability. And so it's pretty simple. Interest rates are like gravity, and you've got a higher hurdle rate and effectively a much higher discount rate. And so it's a focus on profitability.
To what extent do you think Chewy benefited from zero interest rates?
It did. I mean, we raised $350 million, and we would have taken a similar approach. We targeted a certain lifetime value and payback period at Chewy, and that was under a 0% interest rate environment. And so we would have been, our marketing spend was efficient, but we would have been even more selective in terms of how many customers we acquired and targeting a shorter payback period and higher returns on invested capital ultimately. And that likely would have translated into lower revenue growth. But ultimately you allocate capital differently when interest rates are higher. You're targeting higher returns.
So how has becoming chairman of GameStop changed your views on capital markets?
I mean, it's given me firsthand experience in terms of just the public markets per se. But there's more red tape and bureaucracy to work through as a public company than a private company. But at the end of the day, whether I'm serving on a board or whether I'm an actual executive or whether I'm investing in a business, I mean, it's capital allocation. And more involved, you're more involved as an executive as opposed to, there's not much of a decision you can make other than buying and selling versus being a passive investor. But ultimately, it's all just capital allocation.
You disclosed a 9.8% stake in Bed Bath & Beyond in March of this year and urged the board to adjust the company's strategy. In August, you sold that position. Why?
I have a standstill with the company, so I have to be careful what I say. So I'll speak more in generalities. My views of the business clearly changed, and I was highly critical of the strategy and the strategy in the letter that I put out. In general, it's rare to see a company go from aggressively repurchasing shares to losing a lot of money. And so, when I saw that and I saw the results, my views changed of the business, and ultimately I sold.
You've shared before that everything you know, you learned by following in the footsteps of your father, Ted Cohen. What would you say to him if he was still with us?
A lot. I spoke to my father a few hours a day, so I don't even know where I would start. He would get a kick out of watching everything that's going on. So what would I say to him? What would I say to him about what? We'd have a lot to talk about. It'd be a very, very long discussion, and I really wouldn't know where to start.
You have a very strong fan base. What final remarks would you like to leave them with?
I have a very similar sense of humor, and so I get a kick out of seeing some of the content that gets posted online. It's good. It's very, 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 very good. And some of the content that gets posted online, it's a lot of work goes into it, and it's hilarious. So it's right up my alley in terms of that kind of sense of humor. The more provocative, the better. I told you I got a really dark sense of humor, and so after if it's a long, stressful day, there's nothing better than seeing some of the content that gets posted online. the memes, me being a cross dresser.
Yeah.
In some of those, I don't know, I look pretty good in some of those. I like and retweet a few of those. So I don't even recognize myself. I'm like, wow.
Yeah, I'd say you really do show a lot of attention to the face swaps. People put your face on a beautiful woman, and
You've noticed.
I have noticed.
You've noticed. No, I look good. And I'm trying to be humble.
Yeah.
But like some of them are good. So I need to give them a double take, but it's right up my alley.
All right, Ryan, it's been an honor to speak with you. Thank you for your time. We hope to hear from you again soon. Cheers.
Yes, absolutely. Thank you for your time. Thank you for the work that you do for the company. It's it's an honor to be here.